Again, let's talk about your NIMs. They've declined massively in the last 2 quarters. Where are you facing the pressure? Is it cost or is it yield?
No, in fact, if you look at the NIM for the domestic NIM for the full half year, we are at 3.30, and if for the quarter also at 3.19. But as you know, the Bank of Baroda has a large international book, wherein the NIM normally we run NIM below 2% in international book. And as the international book was growing faster than the domestic, then there was a pressure on the NIM side. But if you look at the absolute in terms of 3.30 for the domestic full half year, and the quarter also 3.19, these are very fairly competitive level as compared to any of the banks in the industry. But in comparison to the last quarter, what we have seen that bit of cost pressure is always there. But on the yield side, it is almost flat at this point of time, because then, as you know, that the large portion of the book linked with the repo, and moment the repo is hiked, there is automatic transmission happening. Whereas in MCLR, it always moves with a lag, and MCLR level always depends upon the cost of fund. So I think in the current market scenario, there is still an upside available for the entire industry on the MCLR side. And the moment we see that, I think for the quarter, the Q3 of the current financial year, things should be fairly level, good level in terms of how do you look into the NIM for the full year. And we have given a guidance also for the full year NIM would be around 3.15 with a plus minus 5 BPS. So I think it's a fairly good level to maintain NIM, because the growth is happening at a good pace. Almost on the credit side, the growth is almost at 18%. So a scenario where the growth is very fast, then you have to have some leveling on the NIM side, and that is how we are managing the book in terms of the NIM.
All right, sir, you know, the guidance on the net interest margins has been cut for FY24 to 3.15% from 3.3% earlier. How do you see the net interest margins pan out in FY25?
See, 25 would depend in large extent with regard to the rate scenario. So one good part of the book is that if I'm running a rate sensitive asset and liability, these are all would react to the changes happening in the market on the rate of interest. So a couple of positive things that we have taken in terms of, if you look at my wholesale deposit growth, because the cost pressures precisely was coming out of the wholesale deposit. So if you look at the wholesale deposit, the sequential growth in this quarter on wholesale deposit is only 3.4%. And this particular item was growing almost 11 to 12% quarter to quarter for last many quarters. So we are trying to moderate on the wholesale deposit front. As I said that there would be a bit of what you can say upside still available on the MCLR linked book. And going forward, as a bank, we are very conscious of the fact that we need to trade off in terms of both growth in margin. We are more focused towards the rate of the return on asset rather than only particularly focusing on the NIM process. So we take that as a twin parameters for us to manage. So in FY25 also, I believe will be around that 3.15 level. And this is a fair level in a competitive market to operate in. And at the same time, we'll consistently deliver the ROA in excess of 1 that we have given the guidance earlier. This quarter, the ROA has been 1.14, or rather it has been optimized better. And I think that the NIM and ROA guidance would continue the same way like that we have given the guidance for this year.
Okay, all right. That's on net interest margins, which are expected to be around 3.1% for FY24. Mr. Chand, you know, just talking about specific accounts then, which aviation account slipped into an NPA this quarter? How much was secured exposure within that and how much was unsecured?
It's an aviation account known as under NCLT. So it's known like last time also we informed the market in that. So out of that, 1/3 of the exposure is it is guaranteed by the government guarantee in the form of ECLGS. So balance of 2/3, as we announced this quarter, that we have taken full provision therein. But if you look at this account is a very highly collateralized account. Apart from the primary, which is available on books, which covers the entire exposure, but collateral also, there is a significant exposure, significant coverage of exposure through collateral. So in terms of recoverability, I think that we'll be in a position to recover full money out of this exposure. In terms of accounting provision, apart from the ECLGS exposure, we have made 100% provision in this account.
All right, so that's about the aviation account. But apart from that, you know, business momentum has remained strong. What's your outlook on both deposit as well as loan growth that you see in this year and more importantly the year after, FY25 that is?
See, we maintain the FY25 guidance the same as FY24. Let me articulate the FY24 guidance first. Earlier also said that loan side will be growing at 15% and higher. On this quarter, the growth has been almost at 17.5 or 18% for the full loan book. The guidance still continues to be 14 to 16% guidance we had given earlier. We continue to maintain the guidance on the loan side. On the deposit side, the global deposit growth is 14.6%. The domestic is at 12%. So the guidance on the deposit is 12 to 13%. And I believe in terms of, because I run excess SLR, so any deposit we are raising, I don't have to put money in the SLR to impound that. So any money I'm raising on the deposit straight going to the asset side. So in that scenario, a growth of 12 to 13% on the deposit and 14 to 16% growth on the advances, the absolute amount would evenly balance out. So I don't run into any kind of further requirement of funds for managing books post side in terms of advances and deposit.
So I had one question on Bob World. When is the ban expected to be lifted by the RBI, and how is this possible that 35% FDs are opened through Bob World and only 3% of the NTB savings account are through the app? Is there any discrepancy that's happening at the moment?
No discrepancy therein. In terms of fresh opening of saving fund, hardly 3% gets opened through Bob World. But in terms of fixed deposit, a lot of people in the Bob World itself, existing customer, they create fixed deposit out of the saving fund. So these are two different data to be compared with. So as far as saving accounts are concerned, the new to bank customer, only 3%, less than 3%. As I said earlier also, when the account openings are done through multiple channels, include branch banking, tab banking, there are multiple channels available. A scenario like this where one of the channel goes down because of technical or regulatory reason, other channels picks up substantially. So we are seeing business as usual in terms of opening of accounts. In terms of the transaction flow, digital transaction flow in the entire bank, both in terms of number and volume, these are again significantly up. So I don't think any challenge in terms of how do you look into the impact of this on the bank's business. We say business as usual. At the same time, with regard to the regulatory action, as I said earlier also, there are some action points on the bank. We have done quite a bit in terms of compliance of all those action points. We are reaching out to RBI to get RBI satisfied with regard to the compliance of all those action points. These are the action points which is going to strengthen the banks in terms of the processes, robustness, and the soundness. And I hope that it's a RBI action. RBI ban has to be revoked by RBI only. But I hope that it be revoked at the earliest, because we are fairly at a advanced stage in terms of compliance of all those actions.
Okay, just quickly before we wrap up this conversation, sir, NCLT recoveries have been slow. Your view on NCLT recoveries going ahead?
See, there are a couple of accounts where there is a possibility of even resolution in the coming 2 quarters. So all would depend upon the processes therein. But then, as the kitty is mostly the resolution in the NCLT assets have already been done, and the remaining are very sticky kind of account. There is not much of recovery, but then we have a couple of accounts where we still see recovery coming, a good amount of recovery coming in the Q3 or in the Q4.
All right, you see good amount of recoveries in the Q3 and Q4. Thanks a lot for joining in, sir. With that, we'll slip into a short break on the